Hi everyone, welcome back. So now let's continue with our previous example, but this time we are going to solve it using first in first out method. Like I said, first in first out method is not prescribed by accounting standard 13. Alright, AS 13 does not permit entities to follow first in first out. It always prescribes you to follow only weighted average. But from a curriculum standpoint, we have FIFO in our curriculum, and there can be questions also tested with regard to FIFO method. But if nothing is mentioned in the question, then you will always follow weighted average cost, because weighted average cost is the prescribed method of accounting by AS 13. If nothing is mentioned in the question as to whether you should follow weighted average or FIFO, you will always follow weighted average cost, which is the method that is prescribed by AS 13. A quick recap of facts: 100 shares purchased for 2 lakhs, 50 shares purchased for 75,000. I sold 110 shares for 1 lakh 90,000. Now let's calculate the profit or loss on sale using FIFO method. How do you calculate profit or loss on sale? You need the selling price, which is given at 1 lakh 90,000. You then need the cost of investment that you have sold, or the book value of the investment that we have sold. For this, given that it is a partial disposal, I am going to actually use either weighted average or FIFO. In this lecture, we will be doing FIFO. I will be using FIFO method to calculate the cost of investments that we have actually sold. Now, what does FIFO actually say? First in, first out. What it says is, whatever you have purchased in first, that is presumed to have sold first. All right. Whatever you purchased first, that is going to be presumed to have been sold first. All right. Oh, in this case, we purchased 100 shares first. All right. We purchased 100 shares first, and then said the second purchase was of 50 shares, and then there was a direct sale of 110. So what I'm going to do is, I am going to say that the 110 that I have, 100 shares is coming from lot 1. All right, 100 shares is coming from lot 1, and the remaining 10 shares I will say are coming from lot 2. All right, so there were two lots, 100 shares lot and 50 shares lot. First in, first out presumes that whatever I've purchased in first will go out first completely. All right, what did I purchase first? I purchased 100 shares first, and therefore I will presume that out of 110, that entire lot, the entire first lot has been consumed. And after that, after the first lot is consumed, I will then move to the second lot, and within those 50 shares, I will say that out of those 50 shares, I have sold 10 shares. All right. So under first in, first out, I will use the lot 1 completely until it is totally extinguished. And after that, I will move to the second lot, which is of that of 50 shares. Now, if I'm saying that the entire lot 1 has been sold, then the cost of investments of these 100 shares of lot 1, you do not have to do any average cost calculation. You already have it, because the first lot was purchased at 2 lakh rupees. All right. The 100 shares of lot 1 were purchased at 2 lakh rupees. And the second lot, you have purchased 50 shares at 75,000, and you have now sold only 10 shares out of it. I'm repeating myself. In the second lot, you have purchased 50 shares for 75, but you have sold only 10 units out of it. All right. So the cost of those 10 units sold will be equal to 1500, which is actually the cost per unit, 1500 multiplied by 10, which is equal to 15,000. How did we get it? 50 shares I purchased for 75,000 rupees. So I will first calculate the average cost per unit only in lot 2. I'm not doing a weighted average cost. I'm doing only an average cost per unit for this particular lot. All right, not weighted average cost for this particular lot, which is 1500 per unit. I have sold 10 units from lot 2. The average cost per unit in lot 2 was 1500. Therefore, the total cost of lot 2 that I've sold is 15,000. 1500 multiplied by 10, which is equal to 15,000. The cost of those 10 units that I've sold in lot 2 is 15,000 rupees. The cost of the units that I sold as part of lot 1, I don't have to calculate it separately, because I know the total cost of 2 lakh rupees. All right, I already know the total cost of 2 lakh rupees. So therefore I do not have to calculate it separately. But if you want to calculate it, you can do it in the same way. Average cost per unit is 2000. I have sold 100 units. 2000 multiplied by 100 is equal to 2 lakh rupees. Therefore, lot 1 cost plus lot 2 cost is equal to 2 lakhs plus 15,000, which is equal to 2 lakh 15,000 rupees. Lot 1 cost of investment sold is 2 lakhs. Lot 2 cost of investment sold is 15,000. Lot 1 plus lot 2 is equal to 2 lakhs 15,000 rupees. All right. Lot 1 plus lot 2 is equal to 2 lakhs 15,000 rupees. This is the cost of investments that we have actually sold. I have sold it for 1,90,000. All right. I have sold it for 1,90,000. I have my cost of investments sold was 2,15,000. Therefore, my loss is equal to 25,000 rupees. All right. My loss is equal to 25,000 rupees. Under weighted average cost, I had a loss only of 11,600. Over here, I'm having a loss of 25,000 rupees. All right. My cost over here went up. Under weighted average cost, my average cost was only, the cost of investments sold was only 2 lakh 1,000. Over here, it's gone up to 2 lakh 15,000, therefore increasing my loss. All right, it therefore increased my loss. Therefore, the loss on investments is 25,000 rupees. I'm quickly just summarizing and then we will actually write it on Excel. What first in first out says is, out of these 110 shares, 100 shares have come from lot 1 and the remaining shares have come from lot 2. All right, 100 shares have come from lot 1 and the remaining shares have come from lot 2. Remaining shares meaning 10 shares have come from lot 2. So 100 from lot 1 and 10 from lot 2. If if I'm saying that 100 shares have come from lot 1, then the cost of lot 1 shares is equal to 2 lakh rupees. All right. I purchased those 100 shares for 2 lakhs. Therefore, the cost is equal to 2 lakhs. Is the cost of 10 shares of lot 2 75,000? The answer is no, because 75,000 was for 50 shares of lot 2. But I have sold only 10 shares in lot 2. Therefore, I need to calculate only the cost of those 10 shares, which I calculated by doing 75,000 divided by 50, which gives me the average cost per unit of 1500 multiplied by 10, which is equal to 15,000. So lot 1 cost of investment sold is 2 lakhs. Lot 2 cost of investment sold is 15,000. Total cost of investment sold is 2 lakh 15,000 rupees. Selling price 1 lakh 90. Sale cost is 2 lakh 15,000. I have made a loss of 25,000 rupees. All right. You can compare that with weighted average cost, where I have made only a loss of 11,666 rupees. All right. So therefore, the calculations can significantly differ between weighted average and first in, first out. All right. Now let's quickly start making a note of it. All right. Selling price is equal to rupees 1,90,000. And then I will move on to cost calculation. Lot 1, 100 units, and lot 2, I've got 10 units, right? Lot 100 units was purchased at rupees 2,000 per unit. The average cost per unit within lot 1 was 2,000. Therefore, total cost is equal to rupees 2 lakhs. In lot 2, 10 units, we purchased at rupees 1,500 per unit. The lot 2 average cost per unit was 1,500, and the total cost for 10 units turns out to be rupees 15,000. All right. Total cost for 10 units turns out to be 15,000. Therefore, the total cost that we have is rupees 2,15,000. The total cost of investments sold is equal to 2,15,000. All right. So the book value is equal to rupees 2,15,000, and I have a loss on sale of rupees 25,000. All right. So this is how we actually calculate the profit or loss in case of FIFO. Also, just to clarify, if there was any opening balance instead of 1st April purchase, if there was any opening balance coming from previous year in first and first out, we would have assumed that I'm first actually selling off my opening balance. All right. If there was, let us say, I had an opening balance of 1,000 shares. All right. I already had last year I purchased 1,000 shares and I already have that in my opening balance. Then this entire 110 shares, I would have presumed that they're coming out of the opening balance, not out of the current year purchases. I would have presumed that they're coming out of the opening balance. There is an example that we will do actually in the later stages, so you do not really have to worry about it much. All right. So that is how we actually calculate the profit or loss on sale using FIFO. Now calculating the closing balance. How do we calculate the closing balance of investments? If you carefully think of it, I am left with 40 shares. Those 40 shares are actually coming out of lot 2. Those 40 shares are coming out of lot 2 because I have consumed 100 shares of lot 1. I consumed 10 shares of lot 2 and I'm left with 40 shares, all of which are coming from lot 2 itself. I'm left with 40 shares, all of which are coming from lot 2. Average cost per unit in lot 2 was 1500. Therefore, the cost of investments at which I will carry it in my balance sheet will be 40 shares multiplied by 1500 per unit, which is equal to 60,000 rupees. 40 shares multiplied by 1500 per unit, which is equal to 60,000 rupees. That will be my closing balance. All right. That will be my closing balance. 40 shares belonging to lot 2. Therefore, because it is belonging to lot 2, I will obviously take the price of lot 2 itself, right? If it was belonging from lot 1, I would have taken the price of lot 1. But over here, it is belonging to lot 2. Therefore, I won't apply a price of 2000 per unit. I will apply the lot two's price, which is 1500 per unit, and which is equal to 40 into 1500. That is equal to rupees 60,000. Now, again, if you do the same exercise, over here I showed that 2,75,000 can be split into part 1 and part 2. Part 1 being the cost of investments that we have sold. All right, this is the total cost of investments that we have sold, 2,15,000. Cost of closing balance, cost of investments that I'm still holding is 60,000. The 2,75,000 was my total purchases. One part is the cost of investments that I've sold off, which is 2,15,000. Another part is the cost of investments that I'm continuing to hold, which is equal to 60,000. And if you see, 215 plus 60 is actually equal to 275, which is the amount that I spent initially. All right, so we are breaking that 275 into two parts: cost of investment sold and cost of investments that I'm carrying it forward to the next period. All right, so this is how we actually calculate the closing balance of investment. I am not getting into the journal entries because the journal entries are exactly the same as weighted average, only the value is different. All right, the value is instead of 11,000 loss, I have 25,000 loss. Instead of cost of investments of 201, I have 215 over here. So therefore, I'm not getting into the journal entry. But let me picturize the ledger for you. Just like how we picturized ledger in the previous lecture as well, let us picturize the ledger right now. I have investments debit. On the debit side, I have 2 lakh rupees and 75,000 rupees because I spent 2 lakhs and 75,000, total 2 lakh 75,000 rupees. On the credit side, I will have by bank account 1,90,000 because that is the amount of sale proceeds. I will have by bank account 1,90,000, and then I will have another row which is by loss on sale of investments equal to 25,000. I will have by loss on sale of investments equal to 25,000. Total debits is 2,75,000. Total credits so far is only 2,15,000, right? 190 plus 25, 2,15,000. You will then have by balance carried down, a balancing figure of 60,000 rupees. 2,75,000 minus 2,15,000 is equal to 60,000 rupees. That will be your by balance carried forward to the next period. So what you actually calculate as a balancing figure in your ledger account, you can actually match it with a mathematical calculation in this way. Just like how in weighted average cost also I showed you that the balancing figure in the ledger account can be matched with the with the closing balance that we have calculated using mathematics, the same way under FIFO also that is actually possible. You whatever balancing figure you are actually having in the ledger account as buy balance carried forward, that can be matched with the mathematical calculation as well. All right. So that is what I wanted to discuss about FIFO method. Now, very quickly, let us say instead of 110 shares, I sold only 20 shares. All right. Instead of 110 shares, I've sold only 20 shares. The weighted average cost calculation does not change. You will calculate the weighted average cost. You will find out 1833. 20 multiplied by 1833 will be your cost of investment sold. And then you will move on to calculate profit or loss. But under FIFO method, if you have sold only 20 shares, then those 20 shares entirely are coming only from lot 1. Those 20 shares are entirely coming from lot 1. Lot 1's average price was 2000 per unit. All right. Lot 1's average price was 2000 per unit. Therefore, your cost of investment sold will be 20 shares multiplied by 2000, which is equal to 40,000 rupees. Your cost of investment sold will be equal to 20 shares multiplied by 2000 rupees, which is equal to 40,000 rupees. Your closing balance, you had purchased 150 shares, you sold 20 shares, you're now left with 130 shares. Those 130 shares, 80 shares are coming from lot 1, 50 shares are coming from lot 2. How am I saying 80 shares are coming from lot 1? Because out of this 100 you sold 20, you're having 80 shares left from lot 1, and you're having 50 shares. The entire lot 2 is untouched. You're having 50 shares coming from lot 2. Therefore, your closing balance of investment will be 80 shares multiplied by 2000 plus 50 shares multiplied by 1500. Your closing balance will be 80 shares multiplied by 2000 plus 50 shares multiplied by 1500. Whatever the value is, that will be your closing balance of investments. I am intentionally not putting this on the paper because I'm considering that you guys are mature enough for you to follow me. I believe I've been a little slow in the last part where I'm theoretically discussing without writing, but I hope you guys have understood. If not, please do rewind and rewatch the lecture. I'm sure you will actually understand it's not great rocket science. All right. So that is how we calculate gain or loss on sale of investment. And also we saw the closing balance. How do we calculate closing balance, especially in case of a partial disposal? In case of a full disposal, you do not have any problem because you do not have a closing balance itself, right? You have whatever you purchased, you sold off, so there's no closing balance. All right. And there's no concept of FIFO or weighted average once you have sold everything out. Once you sell everything out, the cost of investment sold is 2,75,000. Whether you apply weighted average, whether you applied FIFO, the cost of investment sold is 2,75,000. All right. So weighted average and FIFO come into picture only in case of a partial disposal, and that is where we've actually seen all the possible cases over here. All right. So that's it for this lecture. We are done with derecognition. We'll start with problem solving from the next lecture onwards, where we'll start preparing a ledger account. Maybe actually problem solving we might not start in the next lecture, but we'll first understand how to prepare a ledger account, and thereafter we'll get into problem solving. All right, that's it for this lecture, guys. Thank you. Bye bye.